I'm Morella Fernandez. Thanks for joining us here on Market Call. Keith Richards is on the show today, President and Chief Portfolio Manager at ValueTrend Wealth Management. He's taking your questions today on technical analysis. Here's how to reach us. 1-855-326-6266 if you want to give us a phone call. You can also email us at marketcall@bnnbloomberg.ca. Keith, thanks for coming in. Appreciate that. I know you do technical analysis, so I want to ask you very specifically, in a short-term period, with so many fluctuations as we have seen over the past few weeks, does that make it harder to do what you do?
No, actually, I mean, you don't want to sound like a braggart, but I've been calling this all along. You can look at my blogs. I write a very popular blog, and I do YouTube videos and stuff. And I've been saying since literally the beginning of January that we were going to fall off the cliff a bit. For many reasons, I mean, beyond the whole Trump tariff thing that everybody's talking about, but I always look at the market as a balloon, and you blow the balloon up, and then the balloon gets too tight, and it just looks for the excuse. So, you know, you look at COVID, you look at 2008 with the tech bubble, you look at 2008 was the subprime bubble, 2001 was the tech bubble. Anytime, even 2022, before the market was overdone on many, many factors, technical and fundamental. Well, here we were again. And so I knew that we already had the big balloon. We just needed so tariffs come along and markets sell off, but it would have been something else. So we've been raising cash. And so, no, it's easier when you get either extremely bullish or extremely bearish. And we had a very over-the-top bullish market last year, and we were very, very overdue a strong correction. Okay, so now that you see the sell-off, I'm wondering if there are certain trends within that you've noticed. Yeah, I mean, tons of sector stuff. So, you know, what we've tried to do is rotate a lot into the commodities that are not related to the financial assets, like the stock markets. And not all commodities look great, but, you know, we buying over the past year, we've been buying tons of gold. We still like it, although it's really had a run. It's probably a little overbought. We actually, a couple months ago on the blog, I was telling everybody buy nat gas because it was breaking out. It's done quite well. We still like nat gas producers and nat gas. So we just sector rotate, and we bought some U.S. bonds because, again, it's likely that their economy is going to be a bit tighter with the tariffs and stuff. So we bought the bonds about a month ago, and they've done okay. So you can buy stuff. There's stuff you can always buy that makes money. The market, money doesn't sleep, as they say. It goes somewhere. So we're holding cash, we're holding bonds, and we're holding sort of non-correlated assets, and we're doing okay. We've got some stock assets, and you know they've suffered, but we have some other stuff that's like the gold and whatnot that's doing quite well. So you know that's what you have to do. You have to be very mobile. Okay, talk to me about volume, because there's been higher volumes, I imagine, over the last few weeks. And what do you do with that? Where are you seeing the biggest numbers? Well, it's interesting because by itself, volume, I use money flow, which is volume is a component of that. So it takes whether the market went up or down, and then it attaches the volume to whether it went up or down. So and you can look at a line that tells you whether there's money flowing into or out of the market. And then I'm getting complicated here, but then I look at the momentum of that money flow. Okay, so how do you determine the momentum of that money? Well, there's actually indicators that you can look at. Yeah. Okay. So money flow index is one of them. MFI. If anybody has stock trading, like stockcharts.com or whatever, they have money flow index. So what I saw, and it's been happening for a while now, is the money flow has been falling. So even though, in volume's going up, so it can fool you, but it's been months and months and months. I'm talking like that was one of the reasons why we went 20% cash very early. A couple months ago. We're actually looking to raise more cash if this market keeps moving down. But whatever the case, the money flow was telling me way ahead of time that sure, volume was picking up, but it was only because people were getting out. You know. So this kind of thing, technical analysis is the main tool you want in markets like this. Got it. All right, Keith is sticking around to take your questions for technical analysis. We will keep him here, and here's how to reach us as we go to a break. Again, 1-855-326-6266 for a phone call. Market call at bnnbloomberg.ca if you are emailing us. We're back in a moment. Welcome back. Thanks for joining us on Market Call. We want to go right to your emailed questions. This one is from Ron. He says, what do you think about Whirlpool and
That's directed to you, Keith. What do you think about Whirlpool? Haven't talked about Whirlpool in a while.
Yeah. So we're going to start off with 5-year charts, and then if I need to look closer, then I'll ask for a 1 year. But generally speaking, anybody that follows my work, I'm assuming that this person, because he asked for me by name, they maybe follow my blog and whatnot, they know that a trend is defined by peaks and troughs. So if we look at this chart, there is a downtrend. And so how do we define that? A couple things. Are the peaks and troughs going lower? Yes, they are. The other thing is that I can't show on this chart, where is the market against the 200-day moving average or 40-week moving average? And I would assume that it's below. Now, what you are starting to see is possibly, so I'm going to clear the screen, and maybe I will ask for a 1-year chart here, but you're starting to see, oops, that's quick. So there's a possibility, if we go back to June of last year, that would be around, it's hard to see that, but it's maybe, what, $80 or something? Sorry, I'll clear the screen so I can see the number. That's $90. So around $90, there is some support. You can see that back June, July of last year. If this zone can hold, that would be called support. If it can bounce off of that, but not until it bounces off, then that may be the end of the downtrend. But until that happens, all we know is that it's at best consolidating with a big question mark beside that.
Okay, for the novice, why 200 days?
Honestly, the 200-day, for two reasons. First of all, it is a big indicator. So in other words, it takes out a lot of the noise. Like the 200-day moving average will tell you the general trend, and things are going up and down. The smaller, shorter indicators, they move around a lot too because they're a short-term moving average. So that's one reason. But the other reason is, honestly, a lot of what I do is behavioral finance. In fact, I wrote a book on the whole subject of behavioral finance called Smart Money, Dumb Money. And really, it's all about what people think is going to happen. So many people believe in the 200-day moving average, it becomes a self-fulfilling prophecy.
Got it, okay.
So, it breaks the moving average. Lots of guys like me, technical people, will go, oh no, it broke the 200-day, like what the S&P did the other day.
It's almost a cycle of personal sentiment. People, this is what
Absolutely.
they think. Okay.
Yeah, so
right.
it breaks because the market's been bad or whatever, and then people go, oh, it broke, and therefore it's bad. It's sort of cart and horse or whatever they say.
Okay, let's go to the phone lines. Joseph is on the line. He's calling us today from Montreal with his question. Hi, Joseph.
Good day. Thank you for taking my call. Keith, I want to know what you have to say or how you view conflicting pieces of information versus, like, specifically what the charts say versus what some other reports would say through the lens of Telus. The charts actually look really good. It's above the 200, it's above the 40-week. Money flow is looking up, RSI is looking up, MACD is looking up. But there's a slow but growing short interest against Telus right now. So if you see those two pieces of information, how do you weigh them against each other, and is Telus a worthwhile investment? Thanks in advance.
Okay, so we'll cover first thing. Yes, you're right. It's actually. Boy, I'm going to get my hand a little bit more steady.
Okay.
I drank a couple of coffees. I'm really
a little jittery today.
A little jittery.
Okay.
So there is a bit of a neckline. I keep drawing this. Okay, that's a better shot at it. There's a neckline there around 22.5. It looks like, and it's trying to break that. And so far, you would see, like you said, some of the momentum indicators and stuff hooking up because we got a nice move. It is struggling a little bit at that 22.5. If it breaks out, that's very, very good news because it means the downtrend ended, the base ended, and a breakout to the upside would be lots and lots and lots of positive, resistance points that we could use as targets. So it is a decent chance, but I would not buy this stock until it broke out because I want to see evidence it did. Now, Joseph was asking about shorts and all that kind of thing. It's part of the equation, but we really look at the chart and the fundamentals. Craig O'Coin at ValueTrend, he's a CFA, so he'll tear the company apart, see if it's a good company. The short interest and stuff is kind of like icing on the cake. It can matter if there's you get too many shorts on a crowded trade, and then they suddenly have to start covering because the stock moves up. Then like the shorts might have to cover if the stock breaks that base we just looked at. But that's the only reason I would pay any attention to the shorts.
Got it. Okay, let's go back to the phone line. Nazar is calling on the line from Scarborough with his question. Hi, Nazar.
Oh, hi, Marilla. Hi, Keith. May I have your thoughts on technical analysis on Air Canada, please? With so much prevailing negative sentiment resulting from Trump tariffs, Air Canada is cutting summer destinations to the U.S. Your thoughts, please. Thanks for taking my call.
Yeah, we're also hearing about people generally not traveling as more. Mostly, we're hearing that from the U.S. right now, Delta and American Airlines, as a result of recession fears.
Yeah. I mean, the economy, look, airlines are economically sensitive stocks, right? So there's definitely, that is a definite factor. And I don't think there's, even before the tariffs, there was pretty strong evidence that, I mean, Canada was already moving into a softening economy, and there was evidence that the U.S. was eventually going to, and here we are. The tariffs have sped the process up. But we were going to move into a soft economy. It was due. Like I talk about the market being a balloon, well, the economy can be a balloon too. So yes, airlines will suffer. Now, when I look at Air Canada technically, though, look at that base. I mean, this is actually pretty interesting because that's a pretty, like, I do a lot of what's called swing trading. I love this kind of pattern, and it's as long as you follow the dotted line, you can make money on swing patterns. So if and only if Air Canada arcs up with definite, conviction off of this, whatever it is, $15 or so support, then it could very well head very close to 24. It may not reach it all the way, but it might get close to 24. That's a pretty good trade. I wouldn't do it until it broke up, and you will need some fundamental confidence, such as maybe Trump backs off on some of the tariffs or something. I don't know, but there'll be a reason. It'll need a reason, but if the reason comes along, you've probably got a $24 stock on your.
When you say if it bumps back up with conviction, what do you mean by that?
Well, you can get spikes. So a lot of the things I have a technical analysis course that I have online, and one of the things I talk about is, look, if something breaks out, you don't just go, oh, look, it break out, I'm going to buy it. Or something breaks down, you don't say on day one, I'm selling it because it just broke down a support level. You have to count a few days because you can get head faked, like the boxers get. So I usually count at least 3 days. I have a rule of minimum 3 days, and then I'll make my move. So I need it to move for at least 3, 4, 5, 6 days, something like that. Then I would consider legging in a little at a time.
Interesting. All right. On that, we do have to take a quick break. We're back with Keith Richards in a moment, President and Chief Portfolio Manager at ValueTrend Wealth Management. Taking your questions today on technical analysis. We're back in a moment.
Stocks on.
Welcome back. Thanks for joining us here on Market Call. We're going right back to the phone lines. John has been holding on the line from London in Ontario. Hi, John.
Hello, Marilla. Hello, Keith. Keith, I have a general and a specific question on two components of technical analysis. The first is, what do you do if an overwhelming macroeconomic intruder appears, such as tariffs, to your technical analysis? Secondly, the specific question, what do you do when a company like Whitecap wants to merge with Varen, subject to tariffs and also in the setting of a merger? Thanks very much.
I've never heard the tariff described as the intruder, but there we go.
Yeah, well, see, so both of those are actually fundamental things, and I don't cover the fundamentals, but here is the answer anyways. Everything is discounted in price. That is one of the original concepts of technical analysis. So in other words, you already know about the tariffs, so they're discounted. You don't know what's going to happen next, but you have everything that there is to know, and the stock market has, and this is one of the reasons why I like more liquid stocks, because there's more participants, and then the crowd knows overall. So when it comes to this stock, I can look at support, and I can say, that's real because we know everything about, the tariffs and the company and the merger and everything. It's all built into the price right now. And then if the stock, I will look for a bounce. I repeat myself a lot on this, but you need a bounce off of support. If it doesn't bounce off of support and it goes below support, then you have a problem. You don't want to own this stock. But if it does move up, then you have a target of somewhere around 11 or 12 bucks. So that's all I can tell you on this. And as far as the tariffs and stuff, that as well is built in because there is concerns over the tariffs. So that's built into the price right now. That's why it's down.
Got it. Okay, let's go back to the phone line. Deborah on the line from Okanagan Falls in BC. Hi, Deborah.
Oh, hi. Good morning. Keith, my question today is on this wonderful company, CNQ. I took 2 positions before all this mayhem, and I'd love your analysis on the sideways trade and also the long-term chart. But my secondary question is, I know you analyze chart patterns daily, weekly, and yearly, but when you do decide to do a buy or sell, do you analyze best buy and sell times during the day, or am I just splitting hairs?
Interesting. Do you go down that detailed?
Well, I have no hairs to split.
There you go.
But I don't do intraday stuff.
Okay.
No, it's fairly meaningless. I mean, even the daily stuff, because I'm looking for a trade that will last me 3 months, 6 months, and how long, if longer, if it can. But often we're trading our stocks out every 3 to 8 months. Okay, so I don't care about intraday. So let's just, hopefully that answers that. I just want to go right to the chart. We owned CNQ, we sold it a little while ago, and I'll show you why. It was moving up, and then it started to consolidate, which I'm fine with. I don't mind consolidations. There was an old resistance level here, and it became new support here, and then all of a sudden it broke down. So I was just mentioning that I count a few days. I don't just sell on a day down below. So we actually gave it a good couple of weeks, and then we sold. We sold it, I don't know, 3-4 weeks ago, and we're up. Yeah.
Got it. All right, let's go back to the phone lines. Gary on the line from Toronto. Hi, Gary.
Hi there. Thanks for taking my call. Keith, on B2 Gold, you commented on it last February, about a year ago. Since that time, B2 Gold continues to be an underperformer related to all its peers and its mid-caps. I've been holding it for almost 3 years. The indicator they're saying it's just hitting the 200-day market. There's a 5% short index position in it. And basically, fundamentally, they signed a deal like Barrick with the Mali government last October, and the stock popped up to 480. Now it's retraced it all back down again because they have not been able to implement the agreement in Mali. So that's the fundamentals. It is at the 200-day. It has been sliding for 3 years. It has not participated. Is it time to drop this doggy to the back door?
Okay, good question.
Yeah, it's a junior gold, or a smaller gold. I own a lot of gold. Like ValueTrend holds at least 15% gold, plus we have silver. Like we're in on that trade, and it's been a great trade. But it's been the seniors. Like we own Barrick, for example. We own the ETF, the XGD. So which holds a wide variety of stuff. But largely, I like gold. But on an individual basis, it's been largely the big guys. Now there could be a catch-up trade, so just be aware of that. But what I'm seeing is, like, as a technical guy, if I want to own gold, I'd rather go with something that was at least, maybe had consolidated, like this may be, and broken out. Because for example, we bought our gold positions when gold broke out about a year and a half ago, and every stock that we've bought since has always had to have that same pattern, that breakout pattern. So I wouldn't buy this until it broke out, and that's just the way we operate. Doesn't mean it's the right answer, but it's just we wouldn't buy this.
Got it. Okay, let's move back to the phone lines. Pankaj is on the line from Brampton, Ontario. What's your question today?
Yes, ma'am. Thanks for taking my call. I just wanted to buy these stocks of Tesla for a period of 6 months to 1 year. So is it a good price point, or is the market going to go much down from this? I just like to know your views about it, please. Thank you so much.
So Tesla having a bit of a rebound in the last 2 days, but has a long way to go.
Yeah, and it's interesting because I got a text now we're discretionary managers, so we run a model, and our clients can't do individual trades with us. We just do the model. But he asked me, this person has been with me for 30 years as a client, and he texted me and he said, hey, Keith, are you guys looking at Tesla? And I have that relationship with him. I'm like, well, it's funny because I was looking at it the other day. And so there's a principle in technical analysis you're seeing here. Old resistance, which is a level that the stock can't get through, becomes new support. So that may, see, I said it 3 times, so people hear it correctly, may be support, and maybe we see a bounce. A couple of days is not enough evidence for me to say anything, but I would look at it seriously because there's a lot of negative sentiment. I can, the fundamentals, people don't like Elon because he's helped Trump or whatever, but at the end of the day, it's a car company, and hopefully people will recognize the car for what it is. I think they're a well-made car and a well-run company. So, at some point there could be a bounce off of the support level. But until that happens, why risk it? You want to see some evidence that the market is starting to forgive whatever it is that they didn't like about it, and maybe it's a good trade from there.
Okay, so just to clarify a little bit more, how many days would you wait? Because as I mentioned, it's been up the last couple of days, but it's dropped so much. What kind of trend are you looking for?
Yeah, like you can get a dead cat bounce for a few days. So I mean, rock bottom minimum, at least another week.
Got it.
I go up to, my rule is 3 days to 3 weeks, depending on the stock.
Okay.
So I'd give this one closer to the 3-week mark.
Got it. Good to know. Okay, we're going to take a quick break. When we come back, a look at our guests' past picks. That's coming up. Now for a look at our past picks. Well, not our past picks, Keith Richards' past picks. He joins me at the table to go through some of those. The first one up is ARC Resources, which was recommended November 25th of last year. At the time, it was $26.72. Now it's dropped a bit to $26.12, or down 2% for the return, down 2% for the total return. What has been happening at ARC Resources?
Yeah, and you'll notice that my picks are always pretty, not like a lot of the guests get it like a year or whatever, and it's because we're fairly trading orientated.
All the time.
We have held this one for a while. It's still a great chart. There's nothing wrong with this chart. You could call it 2% move up or down flat, but so energy has been under a little bit of pressure lately, but this is a great chart, a great company, fundamentally one of the best. So it broke out a while ago, and you are here. It's pulled back a little bit. I'm not going to. It could pull back a little bit more because this old support level could easily be a target for it right now. But the trend is up, and that's all I care about.
So you see it pretty much as in a neutral zone right now.
Yeah, it might pause for a while. It's the pause that refreshes. A lot of stocks do that. They go up, they pause, they move up again.
Got it. Okay, let's go to your second past pick. Global X Silver Miners ETF, recommended at $34.92 American. Again, end of November last year. Now at $38.42. So up 10% return, total return of 12%. Obviously going the right way. What was the trend here?
Well, back when I was on the show, I was telling people that, look, I've been in gold for more than a year. Gold is great, and I love gold still, but it was already reaching a point of technical resistance. So we actually sold a bit of gold, and we still got some, but we sold some, and we started moving into silver. And why? Because silver was, just like if you look at gold, there's the old time highs on silver. We're way below that, and we got this base, we got this breakout. It's a more volatile looking chart, but we think it's going to go to its old highs. So we bought the silver miners, and we bought some individual stocks as well. We just think it's a catch-up trade for silver. It's a better trade than gold right now, even though I still like gold. It's a better trade.
Where is the resistance? At what point do you hit that resistance for gold? Because you mentioned you hit some resistance to gold. I'm
on
just
the gold producers. So
yes.
gold itself, the bullion has no resistance. There's like clean air up ahead of it, right? But with if you look at any of the indices, whether you look at the U.S. index on gold or here in Canada, so what we're going to see on gold is that there's no overhead resistance. So it's going up. And there's nothing, like if we look at the old breakup points, it's at all-time highs. So the story is good for gold. We still like gold, but we do think it's maybe a little bit overbought, and therefore we think there's a catch-up trade, like I said, with silver. And I'm buying the producers because the producers in silver, just like they were with gold, there was a catch-up trade with the gold producers, and they did catch up. But now there's going to be a catch-up trade on silver, we think. And, so far it has been working.
Got it. Okay, let's go back to your top picks. Berkshire Hathaway, always a good standard pick for a lot of people. Let's take a look at where it was at the time, November 2024, $477.43 American, now up to $491.79, so up 3% return, 3% total return. Berkshire Hathaway.
Yeah, well, I come on the show, and since for the last quarter of 24 and well into January of this year, I've been whining and complaining that the market was overdone, like we mentioned at the beginning of the show. I thought it was an overbought balloon, and so we became more and more defensive through the last quarter, in particular of 24, and that included buying things like value, like Berkshire, buying things like gold, buying things, like commodities. We moved into natural gas a while ago. We wanted something that wasn't the stock market. We recently bought the U.S. T-bills. So this was November, so we were just starting that move, probably only a month or two into it. But we're now 20% cash, and we have, we're value. We still hold this stock because it's a value play. So you got to have some stocks, and I'd rather have value than growth. Look what the Mag 7 did. They just imploded. Berkshire's gone up. That's been the rotation. Got it.
Okay, Keith Richards is sticking around to take more of your questions in a moment. Stay tuned. Welcome back to Market Call. We have Keith Richards in-house taking your questions today for technical analysis. John is on the line. He's calling today from Unionville, Ontario. Hi, John.
Hi, Miranda and Keith. Good afternoon. Keith, could you please give me technical analysis on BMO? The banks have come down 5% plus, and BMO has come down maybe 10%. And I'm just wondering if it's a good opportunity. Let me know the technical analysis, please. Thanks.
Okay. Yeah, like the banks have been, again, it's been this with the T word, tariffs. There's been a flight to safety. We were talking about Berkshire a minute ago, one of my picks, the golds and stuff. And the banks can be one of those good places to be. And so it's the only thing is that, so BMO, we'll just specifically address this chart. There was sort of a level of resistance going way back to 22. So it is kind of old. It's like 3 years ago. But still, charts be charts, and there's some reason that it decided to fall right at that old point of sell-off from 22. Things happen for a reason. Investors have memories. They remember when it peaked there, and some people are going to start selling it, and that's what's happened. So the question is, like, how much selling will take place? How much memory of those people that did buy it in 22? Because somebody bought it. For every trade, there's a buy and sell. We got to wash them out, and my target would be that if, let's call it worst case scenario, there's not a prediction here, but that it could go down to that, and it's really hard to see the levels. I'm going to say that looks about $130. So maybe it'll pull back to 130. That's not a prediction, but that's probably at least a 50 or greater % chance that it'll do that before it finds support.
Okay, so should he consider selling then at this point when he's got it at 138?
It depends on what kind of trader you are, because if it continues to move down with no evidence of a bounce really soon, then yeah, I would probably, if I was a more near-term trader, see a long-term buy and hold person just say, okay, I accept it's going to go down to whatever to bounce up. But if you're more like me, you would maybe just say, let's get out and then go back in again later.
Got it. Okay, let's go back to the phone lines. Majinder's on the line from Edmonton today. Hi, Majinder.
Hi there. My question, Keith, is on OceanaGold Corporation, OGC.TO. I was thinking of that or CN Railway. Your expert matters on that, please. Thank you. Bye-bye.
All right. Here's OceanaGold over 5 years.
Well, as Austin Powers said, I like gold, Mr. Powers. So
everybody does, right?
Everybody likes gold. And, it's hard to argue with the gold chart, although I will say that this chart looks a lot like a lot of gold charts. It is coming into a point where it's seeing a little bit of pause, and that's because it did this. And so that's okay. Often a stock will have this big run, and then it has to wash out the excess. It's either like the stock market right now. I've been saying the market's got to wash out its excess. The tariffs are the excuse. It doesn't matter what it is. The market's excessive, so it's going to pull back. Well, this could be markets pull back in two ways. They either go down or they go like this and they consolidate. And this may be the case. In this case, because there's a really good argument for owning gold, that you may see this stock go up and down like a yo-yo for another month or 2 months or whatever, and then eventually break out. But that's to be seen. It's so far, I'd hold it if I owned it.
As opposed to CN.
We're at CN Rail?
Yes.
Totally different company, totally
I know
different business.
he brought up OceanaGold or CN, so I was just wondering you take the gold over CN.
Yeah. Bring up the chart. We have a small position, I think, in CN Rail, and it's been not a great looking chart. And actually, I'm looking at maybe selling it. I think we do have a 2% position in it or something.
Okay.
So
You're just about to pull it up.
yeah.
There we go.
So
Okay.
you can see why I'm looking at selling it.
Yeah.
So we haven't sold it yet, but it's on a list. I sent Craig a list this morning. I said, these are the stocks I want to get rid of if there's because we actually kind of bearish on the market. So I said, we want to raise some more cash. Here's some victims that we could sell. And this is on the list.
Got it. Okay, let's go back to the phone line. Mark's on the line, calling from Cochrane, Alberta. Hi, Mark.
Sure. Hello, how are you?
Good. What's your question today?
My question is on Altagas. They form synergies with Keyera. Also, LPG stuff goes to Asia. And what's his take on tariffs with their gas distribution in the States? I'll hang up and listen. Thank you.
Thank you.
Yeah, so I don't have any take on the tariffs and what's going to happen in the negotiations. I think probably nobody does, but I'm not a fundamental guy. I just look at the charts. But like I said near the beginning of the show, all knowledge known at this moment is built into price. So that's the only thing we need to know as a chart follower and with my way of trading. So there's an up market. Now, the problem with this chart is that it's not a problem because you've made money on it if you owned it. It's arcing up. So it's making a sharp angle up. And sharp angles up are almost always eventually corrected. Here and here. And, they correct. They correct just a little bit or they correct a lot. So I'm thinking that this trend has been in place long enough that it'll probably just correct down to the trend line. So, what are we at right now? We're at 38. And if we were to try to roughly draw this trend line, that might bring us back to 35 or something. So, I could easily see $35 on this stock as just a regular pullback. As long as it doesn't crack that, I'd be happy with the stock. I'd continue to own it.
Got it. All right, Keith Richards sticking around. We are going to take your phone calls again when we come back. Stay tuned. Welcome back to Market Call. We have Keith Richards in-house, and we are ready to take your questions. Steve's on the line, or Stephen's on the line from Toronto. Hi, Stephen.
Hi, thanks for taking my call. Keith, I watched your video the other day on YouTube. It's a great analysis. For those who don't subscribe, I'd actually recommend that, ValueTrade Canada. But speaking of the Mag 7 imploding earlier, I was wondering about Amazon. I was looking at the 5-year chart just now. I was wondering, is this a new ceiling that was just a few months ago, or is this a temporary pull down because of other sell-offs? My theory is that there's strong value there because of AWS, but wondering what the technicals would suggest.
Thanks. Yeah, well, thanks for asking because I like this chart. This is an example. I was just on the other color. You get parabolic moves. And they always correct. They either go sideways or they go down. And this is one of those ones where it went parabolic. It was crazy. 2024 was bananas. And I know I repeat myself, but I've been warning people for months and months on this. Talk about my videos back in January. I said the market's going to fall. So I like doing these kind of things because it shows that I put my money where my mouth is. But so it was dutiful. It had to. So this is a trend line, and it was. I can't see the 200-day moving average right now, but I can almost guarantee it was well past 15% or so over its moving average just by the look at this chart. And I have a rule: 15% or more over the 200-day, we've got to get out. So I think it's pulling back. I'm sorry, I'm going to draw the trend line a little bit better. It's maybe just testing the trend line. I'd want to see evidence of a bounce, but if it does bounce, I'd be all over this stock. I think it's a great company.
Got it. Okay, let's go back to the lines. Henry's on the line calling from Vaughan, Ontario. Hi, Henry.
Hi, thanks for taking my call. I'm asking about the Freehold Royalties. I checked its balance sheet, and it can cover the dividend quite well. And I bought it at $12 a share, and at that price, they're paying a 9% dividend, and they're paying it monthly. Now, does the dividend yield and the balance sheet help in assessing whether or not it's forming a bottom? Thank you very much.
As far as forming a bottom, it all depends on how secure the yield is. And I can't answer that because that would be my associate, Craig, at the office. He does all the fundamental stuff, and he'll tell me, no, you don't think they're going to be able to continue paying it. But so there, sorry, I'm going to try to draw that line again. There we go. It does look like there was a support level, maybe around 13 or so, that was broken. And yeah, it's trading at 12.5 or something right now. That's not great news. However, the dividend, like you said, may just support it here. I personally, I'd want to know from a fundamental analyst, and I'm not the guy for you, if the company is stable enough to be able to continue paying the dividend. If it is, and it's got, then it'll probably move back up again. But the fact that it's broken its support is a bad thing as far as I'm concerned as a technical person.
Got it. Okay, let's go back to the phone lines, get as many callers as we can. Fern on the line from Thornhill, Ontario. Hi, Fern.
Hi there. Thanks for taking the call. Hi, Keith and Marilla. I'd like to know what you think of Cenovus Energy, what your technical analysis is. Thank you.
Cenovus.
Yeah, it's like a lot of the energy stocks. I mean, I like the energy trade. And by the way, we're just coming into the point where you want to own energy. It's usually between mid-February and May or June that the sector can move. So Cenovus is at or maybe slightly below support. I would want to see it. No, I would want to see it bounce to be bullish on it. But I've seen this on a couple of the oil companies. This isn't the only one that's done it. I'd probably say give it another week or two at least and see if it will bounce because this is the season that you want to own energy. And if it doesn't, if it breaks down some more, then you'd have to get out.
Okay, why is this a season quickly?
Seasonality on oil is it's a favorable period of time, basically from around mid-February to around beginning of June or so. It tends to be when oil producers are stockpiling ahead of the driving season, which North America is the biggest driving customer of fossil fuels. So they burn a lot of fuel. There's more fuel burnt, so the producers stockpile ahead of time. So it tends to mean that the stocks can go up a little bit ahead of that driving season in the summer. And funny enough, the stocks go flat usually after June.
Got it. Okay, let's go back to the phone lines. Kyle on the line now from Orillia in Ontario. Hi, Kyle.
Hello there. I'd like your thoughts on MDA Space. I bought it around $14 a share, and it had pretty good earnings. I would like to know if you have the power of foresight, if it'll break past the $27 mark. Thank you.
So good Canadian company putting satellites into low
And a great
orbit.
call.
Yeah.
Like $14 you bought it at. And
up to 27.5.
Good for you. So yeah, so there's that parabolic move. We were talking about that. These things always wash out. Eventually, they wash out either in a downtrend or they wash out in a sideways period, right? So we got the pullback, which was very, very needed. Seems to base and seems to be bouncing off. I mean, you're going to have some resistance at this old whatever $30 or something level, but so far it's. It doesn't look bad. Like I'd say the fact that it's bouncing in the face of all these tariffs and every other thing that's going on out there, it's probably got a darn good chance of going to $30, and we'll see if it goes through there.
Got it. Okay, let's get to one more call here. George is on the line from Mississauga in Ontario. Hi, George. What's your question today?
Hi. I wanted to ask Keith about New Vista Energy. I bought it in the low 11s recently. It didn't bottom as low as the October lows, and I wanted to know where it's going from here. And is RSI a good indicator to look at when I'm trying to exit a stock? I'll hang up and listen to your answer.
Thank you.
Yeah, RSI definitely can help you because it'll pick overbought, oversold signals. We hold this stock in our aggressive platform. So we have our regular equity platform, which has the vast majority of the capital held at ValueTrend, but we do have an aggressive platform, and we buy stocks that are a bit more choppy, and this is a good example of one, but it's a great pattern. We like it. I mean, this is one of those swing trades that I like so much. So, kind of support around $10 and resistance at around whatever, $14, $15. I think that if you could use even RSI, it'll probably swing up from an oversold there, and it'll start to get overbought near the top of its range, and so that's a great indicator to help you. But you already know that you're looking somewhere near $15 to sell it. So far, it could return a little bit lower to get to the old support level, but so far, I mean, I'm in it, so that might tell you something. We think it's a good swing trade.
Got it. Okay, we are out of time for phone calls at this point, but stick around because Keith is going to share his forward-looking top picks. We're back in just a moment. Welcome back. Keith Richards is at the table and sharing some top picks at this point. Let's take a look at those. His first one is iShares, the 20-year T-bond ETF. Keith, tell me why you like this.
Well, we started buying this in January, and actually I mentioned it on my blog and the videos and stuff. It makes, actually I'd like maybe a 1-year chart because I can kind of show you the pattern a little bit better. But basically, we're looking for, we don't like the stock market. Have I made myself clear through this show? We haven't liked it for several months. So like back in the third quarter of last year. So we were looking for alternatives. And so this is an alternative. So what we saw was two things. It's not stocks, it's bonds. There's the probability of rates having to come down in the US. They have in Canada, but they're kind of set with a pending recession possibility in the U.S. to happen. And so we bought on this little breakout. We know our downside is actually we would sell it at around, I think it works out to be about 86 or something. And our target is, we said, okay, first target is 95, second target is 100. So we're earning a little bit of a dividend on it, and it's not correlated to stocks. So it will march to its own beat, meaning mostly inflation and the dollar and interest rate policy.
Okay, so you are holding on to that for a little while. We'll move to your next pick ahead. Forward-looking is Imperial Oil, IMO, and the TSX. What do you like about specifically Imperial?
Yeah, so it's interesting because one of the callers before asked about CNQ, and I said we sold that. Well, we sold it and we moved into IMO.
Okay.
So we like this chart because it's a gain. You can kind of see the pattern. I like swing charts, and this because they're easy to trade. You kind of try to buy it as close as you can down here. We were buying it somewhere around here, and we hope to see at least go to 105 or so. And we will have to decide if we were sell it at that point. We probably will. Okay. But we just like the chart better than a lot of other oil stocks.
I know it's hard to tell sort of from that specific chart, but it's at 96 today. At the bottom, was it around 85, 86? I can't really tell.
Yeah, that was high 80s.
High
roughly.
80s?
We didn't buy it at the bottom. We wait for a bounce, so we were buying it. And it actually didn't reach it in the point where we bought it. We were buying it off of this move and kind of bought it in here, maybe 92 or something.
And the bounce is above 105, so 100.
Yeah, I'd like to see it go to at least 105, and then we will decide if we're going to sell it. We probably will.
Got it. Okay. Let's get to your last pick, which is a new one for me. Cash is your top pick. You said you've been moving more into cash at the end of last year.
Yeah, we have, we were 10% and 15% in January, then now we're at 20%. And, the S&P just broke below its 200-day moving average. We have all these rules. We're very rule-oriented. We don't have opinions. We just have rules. And so we say, okay, another few days. We need minimum 3 days, maximum 3 weeks. So we're going to look into next week. If the S&P is still below its 200-day, then we're going to raise another 5% cash. We'll be at 25% cash. But I can't say that's for sure because I just got to see what's happening. So in the meantime, what do you do with your cash? Well, right now we're just holding the cash. But if we feel we are moving into a bear market, and I'd give it at least a 50% chance of that happening, then if we do move into a bear, we're going to move it into something that pays some interest. Because if we know we're going to sit on it for 3 months, we want our clients to earn some interest on it. So one of the we were just talking at the break, the Global X cash thing. I like that because I can cash it the minute I want it. It's not an endorsement for it. We don't even own it. But I have traded that before. You can also buy T-bills. You can buy an independent HISA, high interest savings account. There's lots of ways you can do it, but that's just one way that we like.
And when you say you will sit on the cash and then maybe sort of put it into one of those funds, how long will you wait? What's your point of cutoff where you're like, okay, the cash is sitting here for too long, so it's time to do something with it?
Well, we're always thinking, we'll hold the cash because if we think that there's opportunity, because this is just a pullback within a better uptrend, we want the cash readily available. We don't want anything in our way. But when we become more and more convinced, as we are becoming right now, that we're possibly, not a prediction, possibly moving into a bear market, like 22, maybe a 25% drawdown or something. That's not a prediction, but there's a possibility of that. And so if that happens, I'm going to put the money into the cash investment or a HISA or whatever, because I know I'll be in cash for a while and I'll be building it up and I'll probably be there for 3 or 4 months. So as the market continues to wash out. So this is if it turns into a
What
bear.
are you seeing? And I know you're saying it's not a prediction. You're saying there's a 50% chance of going into a bearish market. What are the bits that you're seeing that you are tracking to say that?
Okay, so I do write a blog, and I encourage everybody to go to my blog at ValueTrend.ca, and I actually walk you through the exact steps I'm looking for.
Okay.
But what's going to happen in order for it to turn into a bear market? What's the next move? All that kind of thing. So you can do that. But in a nutshell, we just took a lower low on the S&P 500. Around 5,800 was the low. It broke that. It's just now breaking the 200-day. It will rally because it's so oversold. So we'll see a rally in the next little while. And then kind of today it's happening already. So we get the rally. Will the market move back above its 5,800 level and above the 200-day? If that does, then maybe it's not a bear market. But if it kind of falls, it climbs in this current rally, but it only meets something like 5,800 or so, or maybe just a tiny bit above that, and then starts to fail again, I'll say that's a bear market.
Got it. Okay, Keith Richards, great to have you in, sir. Thanks for your perspective on what we've been looking for. And we are going to leave it there for today. We'll see you again soon, and we'll see you again tomorrow. Thanks for joining us.